Hello there, this is Victor here. Welcome to the Intelligent Investor channel. Recently, one of the biggest news is that Microsoft is releasing a brand new AI-powered Bing search engine and a brand new Edge browser that is powered by OpenAI technologies. Specifically, Microsoft's new Bing search engine and Edge browser will use OpenAI's next-gen large language models that are even more powerful than ChatGPT. Microsoft is an early investor in OpenAI, the maker of ChatGPT. Right now, Microsoft is planning to invest as much as $10 billion in OpenAI and use many OpenAI technologies, similar to ChatGPT, in the Bing search engine, Edge browser, Word, PowerPoint, Teams, Microsoft Azure, and many other Microsoft applications and cloud computing services. Here's the important part if you're an investor in Microsoft stock or Google stock. Many investors think that Microsoft may disrupt Google's search business and take away Google's search market share. So in this video, I'm going to talk about Microsoft versus Google to see which company will likely win the AI search engine and ChatGPT war. You will learn about these topics in this video. First, a quick stock portfolio update. Second, who will win the AI search engine and ChatGPT war, Microsoft or Google? Third, is Google stock undervalued? And fourth, Google stock rating. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog. I've posted a link in the video description. Once you become a Patreon member, you can follow all the stocks I'm buying every month, follow all the stocks I'm investing in for the long term, and download the latest intrinsic value calculator so you can estimate whether a stock is undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. I want to give you a quick portfolio update first. I always show this growth stock portfolio in many of my videos. This is just for illustration purposes only to show my investing strategy and all the stocks I'm buying for the long term. I also have other larger stock portfolios. They have the same stocks and the same investing strategy. When I first started investing after graduating from college, I only have $5,000 to invest, so I started this portfolio with $5,000. To grow this portfolio over time, I always follow this monthly investing plan. I always pay myself first and add at least $1,000 to this portfolio almost every month. And whenever I have extra savings, I will add them to this portfolio for long-term investing. Once I have $1,000 or more to invest in this portfolio, I will keep investing the cash in the best companies that I believe will grow substantially in value over time. Of course, I made many investment mistakes in the past, but I will talk more about them in a separate video. My investing strategy has changed a lot over time. I used to be a 100% growth investor. Now I invest in both growth stocks as well as dividend growth stocks, depending on market conditions. Here's my investing strategy now. First, I always look for the best companies that are well managed, with great management, large economic moats, increasing earnings, and increasing free cash flows over time. Second, I will only invest in an outstanding company when the stock is undervalued. This means I will only invest when the stock is below its intrinsic business value to reduce risk. And third, once I invest in an outstanding company, I will let the company grow in value over time instead of trading the stock. So here are two recent examples. A few weeks ago, I bought 10 shares of American Express. I used this intrinsic value calculator here to calculate American Express stock's intrinsic value. At that time, I found that American Express stock was likely substantially undervalued, so I decided to invest in it because I like the company's business model, its management, its long-term business prospects, and its large economic moats. Now it's up around 16%. Last week, I decided to buy 3 more shares of ASML, even after the stock recovered a lot recently. I bought ASML shares many times before. I used this calculator to calculate ASML stock's intrinsic value. I realized that ASML is likely still undervalued based on its expected free cash flows discounted to the present day. So I decided to buy more ASML shares. If ASML stock drops more, I will likely buy more. This because I like ASML's business model, its monopoly business in EV lithography systems, its long-term prospects, and its wide economic moats in the chip-making lithography market. In this market, when inflation is still high and when the Fed is expected to increase interest rates more to fight inflation, I think it's important to focus on the best high-quality companies that are undervalued. If you look at this portfolio here, you may notice that Microsoft and Google are my two biggest long-term holdings. Microsoft makes up about 17% of this portfolio, and Google, also known as Alphabet, makes up about 16% of this portfolio. So who will win the AI search engine and ChatGPT war? Microsoft or Google? Before I answer this question, I want to give you some context first. Right now, Microsoft wants to disrupt Google's search engine business and capture more search market share by introducing the AI-powered Bing search engine, Edge browser, and other Office applications that will use OpenAI technology similar to ChatGPT. For years, Google has had over 90% of the market share in search, while Microsoft Bing only has around 3% market share. Also, Google's Chrome browser has had over 60% of the market share in web browser, and Microsoft only has around 4% market share. This from the Wall Street Journal. This is a recent interview with Microsoft CEO Satya Nadella. I have shortened the video to show the most important parts of this interview.
Microsoft CEO Satya Nadella finally thinks he has what it takes to make Bing happen and grab some search engine market share from Google. Microsoft is taking OpenAI's newest artificial intelligence model and intertwining it with Bing's search data so you can chat with the search engine and get up-to-date information.
So the entire point of ChatGPT early on was to just sort of show the power of the large model and the conversational intelligence. We now have not only the current information that you usually expect from a search engine, but you can then have a full conversation around that current information and all the other information that came before.
On top of the new AI chat features in Bing, Microsoft is adding ChatGPT-like features to its Edge browser. The first big new feature, Bing Chat, incorporated right into the front page of Bing, will be an Ask Me Anything box. Type in your query, and up pops your usual search results, which Nadella says has also been improved with AI. But more interesting is this new chat box that will start typing out an answer to the question. As it answers, it also includes citations, so you know where the information is coming from.
It allows me to then have a full-on conversation around all the search data. So yes, it's annotated. It's about being able to create even the links back to all the publishers. So this is just search, just better.
Like ChatGPT, you can ask it non-search type things too, like
write 10 questions for Satya Nadella about AI.
what are the key features and benefits of new Bing chat mode, and how does it leverage AI to enhance the user experience?
It really is grounded in search results and helps me have a very contextual chat to be able to get to the right answers.
Satya Bing said, or AI Satya said, the new Bing chat mode leverages AI to understand the user's intent, context, you said context, and preferences to provide relevant, visual, logical, and actionable responses.
I love the AI, Satya.
The second big feature, Microsoft Edge integration. The Microsoft Edge browser will now have a Bing sidebar where you can ask it to summarize a web page you're on or ask it to generate text. For instance, I asked it to...
So I want to write about a letter to Satya Nadella, thanking him for his time.
Then I was able to tell it I wanted it written in an enthusiastic tone, in email form, and short. The question is, which company will write that draft for us? Will it be Microsoft with tools like this? Or Google, which owns 90% of the search engine market share? And, right before my interview with Mr. Nadella, announced Bard, its similar AI chat feature that will come to its own search engine.
The last time I checked, search was the most profitable category there is on planet Earth. So therefore, all I need is a few more users and someone else that I'm competing in has to keep all of their users and all of their gross margin. I'm looking forward to that.
What about Microsoft Office?
Just stay tuned. I fully expect us to introduce these capabilities, quite frankly, across the length and breadth of Microsoft.
At the time of making this video, OpenAI's ChatGPT is the most disruptive AI chatbot. We can chat with ChatGPT similar to how we interact with other people. We can ask ChatGPT any questions in almost any subject. ChatGPT's natural language processing model can understand most of the questions we ask and give us very human-like responses. The biggest limitation is that ChatGPT uses data that's before 2021. Another limitation is that ChatGPT can often give us incorrect information. Microsoft is one of the largest investors in OpenAI. Microsoft's new Bing search engine and Edge browser will use OpenAI technologies that are more powerful than ChatGPT. More importantly, unlike ChatGPT, Microsoft's new AI chatbot will have access to the most current news and data and will not be limited to data that's before 2021. To compete with ChatGPT and Microsoft's new AI-powered Bing and Edge browser, Google is planning to release an AI chatbot called Bard that will work with the Google search engine. So who will win the AI search engine and ChatGPT war? I think it's too early to tell whether Microsoft or Google will win this AI search engine and AI chatbot war. My best guess is that both companies will win the current AI search engine and AI chatbot war. Microsoft and Google have been large investors in cloud computing, public cloud infrastructure, AI supercomputers, AI research, machine learning, and deep learning for many years already. For example, Microsoft already invested $1 billion in OpenAI and is planning to invest as much as $10 billion in OpenAI. And Google recently invested $300 million in an AI firm founded by former OpenAI researchers. Also, Google owns DeepMind, which is one of the leading AI research companies in the world. Microsoft may gain a small amount of search engine market share from Google, but it's too early to tell whether Microsoft's AI-powered Bing and AI chatbots can convince more people to use Bing instead of Google, or convince more people to use Edge browser instead of Google Chrome. When it comes to search, the most important thing is accuracy, and how fast results come back when we type a search query. As of now, ChatGPT's biggest downside is that it does not always give us the most accurate answers. Also, Google's upcoming AI chatbot Bard gave a wrong answer in the first public demo. Going forward, I think a more important question is, will AI chatbots replace online search engines, or will AI chatbots be extensions of search engines? If I have to make a reasonable prediction, I think AI chatbots will work alongside search engines and not replace them. Based on my experience using Google, Google gives the best and most accurate answers in most cases compared to Bing and other search engines. Also, Google is the fastest to answer queries in most cases, so I don't think ChatGPT or AI-powered Bing can replace Google now. Also, Google will release its AI chatbot Bard to the general public to compete with ChatGPT and Microsoft's AI chatbots. These AI chatbots will improve over time as more users use them, but again, I don't think they will replace Google or Bing. I want to show you how to calculate Alphabet stock's intrinsic value per share here, so you will know when Alphabet stock becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Alphabet's intrinsic value as its future free cash flows discounted to the present day. I use a discount rate of 11% here. You can use a higher discount rate here if you want to be more conservative. Alphabet's most recent 12 months of free cash flow is $60 billion. We have to be forward-looking when it comes to investing, so we have to forecast Alphabet's growth over the next 5 years. According to Skin Alpha, Alphabet's consensus revenue is expected to grow on average 9% each year over the next 5 years, and Alphabet's consensus earnings per share (EPS) is expected to grow on average 15% each year over the next 5 years. In this high inflation market, we have to expect Google to have very low revenue growth or no revenue growth in 2023. The biggest reason is that many advertisers are slowing down their ad spending significantly because of high interest rates, lower demand, and a possible recession. There are 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're assuming Alphabet's free cash flow will not grow in 2023. Then we're forecasting its free cash flow will grow by about 10% each year over the next several years. If we forecast Alphabet's free cash flow over the next 5 years and discount the free cash flow to the present day, Alphabet's intrinsic value should be around $1.6 trillion for the entire company, or $125 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're assuming Alphabet's free cash flow will grow by about 2.5% in 2023. Then we're forecasting its free cash flow will grow about 12.5% each year over the next several years. Then Alphabet's intrinsic value should be around $1.79 trillion for the entire company, or $138 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're assuming Alphabet's free cash flow will grow by about 5% in 2023. Then we're forecasting its free cash flow will grow about 15% each year over the next several years. Then Alphabet's intrinsic value should be around $1.98 trillion for the entire company, or $153 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Alphabet's intrinsic value should be around $139 per share. I also use this price to book valuation method to estimate Alphabet's fair value, which should be around $1.4 trillion for the entire company or $111 per share. If we take the average of both valuation models here, then Alphabet's intrinsic value should be around $125 per share. Just to compare, Morningstar estimated Alphabet's intrinsic value to be much higher at $154 per share. This means I believe Alphabet is undervalued by around 24% at the time of making this video. So here's my stock rating for Google. If you look at this spreadsheet here, you can see there are 5 main criteria I look at when I analyze each company. Under the acclimate mode rating, I give Google a Y acclimate mode because Google has a near monopoly in Google Search, YouTube, Chrome browser, and Android OS. Google Cloud Platform is also one of the largest public cloud providers in infrastructure as a service and platform as a service. Under the management rating here, I give Google exemplary because I think Google's management has been outstanding in managing Google's businesses, Search, YouTube, Chrome browser, Android OS, and also Google Cloud Platform. Under the profitability rating, I give Google a cash cow rating. This because Google is one of the most profitable companies in the world. Google earned $60 billion of free cash flow in the past 12 months. This is slightly more than Microsoft's free cash flow in the past 12 months. Under the moat trend rating, I give Google a stable moat trend rating because I don't think Google's acclimate moat is impacted by ChatGPT and Microsoft's AI-powered Bing. Of course, there will be more competition in AI chatbots and search engines going forward. Under the risk and uncertainty rating, I give Google a medium risk and uncertainty rating. Overall, I am giving Google or Alphabet a stock rating of 11. This is one of the highest stock ratings here. This means I believe Google is one of the best companies for long-term investing. Personally, I will only invest in Google when it's undervalued to reduce risks. Price is what you pay and value is what you get. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.